is what you would find. This is what it would look like. A chance to have a major rip. And look where it lines up. This lines up mid-June, play out to a T with how GameStop tracked back in the January run-up, January squeeze. This is what I'm excited for. That is exactly right, and it's happening right now before your eyes. GameStop is trading at $22.98, up 4.5% currently as I'm making this video, and it is playing out to a T with what we were tracking in that chart analysis video. Get ready. We have a lot of stuff to go over in today's video. Make sure to stay till the end. Hit the like button if you find value out of the video or enjoy watching. Hit the subscribe button. Join us on this journey to financial freedom. Without further ado, let's get into it. Okay, so in the clip that I played for you, we talked about early to mid-June for GameStop actually making its move, and it just so happens that GameStop is announcing their earnings between June 1st and June 8th of 2023, which lines up perfectly as a potential catalyst. Now, aside from the algorithms doing its thing, aside from the potential fundamental catalyst that could be happening with GameStop, we also have retail and institutions betting extremely bullish on GameStop, which is what I wanted to talk about. Now, Peter Hahn tweeted this: "I don't care if Bridgewater dumped it. I'm seeing that people post 13F searches showing other funds have been adding." And you can see right here in the institutional ownership for GameStop, institutions have been loading up on GameStop. Why right now? Why is everything bullish on GameStop? Well, first of all, we did have that 50% gap up on the recent earnings when GameStop actually went positive on their earnings, and we could potentially be seeing an even more positive earnings early to mid-June. But I find this interesting as institutions were loading up on GameStop and were holding a ton of it leading up to the run to $500. However, they actually let go a bit early when the price started scaling up. They probably didn't think this would have happened, especially with the way they controlled the markets, but again, the buy button was taken away and institutions ended up selling off before this second run up, before June of 2021. So we have had a 2-year span to where we're at now, and all of a sudden institutions have been loading up on GameStop. Now also, if you take a look at the options chain, this is something that I wanted to pay attention to, which is extremely important. The call to put ratio on GameStop is absurd. First of all, we're winning on this week 41,000 calls compared to 1,000 puts expiring in the money, as well as 64,000 out of the money compared to 48,000 puts. So a lot more people are betting bullish on GameStop. And if you look at the options chain next week, the week after, the week after that, the week after that, the week after that, the week after that, so on and so forth, the entire options chain, which we don't see commonly at all, is betting bullish on GameStop. We do need to pay attention to this, especially compared to how the institutional ownership looks for AMC, because it looks like they may try and get out of GameStop first and let AMC be the long play. They might be more trapped than AMC. Now, this could just be a potential adjustment, but the free float DRS for Stonko Tracker is reporting at 54.6%. Shares available to borrow at 900,000 at a most recent fee of 8.9%. All of this stuff, it seems as if doesn't really matter, but one thing that definitely matters is the options chain, because market makers do have relative control over the options chain and what happens there. Now, we did have a recent pop in GameStop. I am still holding those calls. First of all, that Discord call out was beautiful. So if you guys did catch that in Discord, shout out to you. I am still currently holding, just to disclose, my GameStop calls and my AMC calls. The short exempt volume rose to 12,000 on that day where we had a little bit of a spike yesterday, which is not too high, but a stock with as low volume as GameStop is pretty high for short exempt volume, which shows that they may try and stump this thing from going even higher, or at least just from gamma ramping too hard. Speaking of that, cost to borrow is at 73% with AMC, according to Stonko Tracker, with 150,000 shares available to borrow. Now, a lot of people are talking about this. Real quick, AMC options max pain is at $10. AMC short daily volume is over 61%. This is what people have been bringing up. And Terra's huge put position / huge short position on AMC exceeding 10% of the float. Now, there are theories going around that this is just to manipulate the max pain. And you guys let me know your thoughts on that in the comments down below. But that does seem believable. And here's why. The institution has disclosed a whopping 55 million shares and put options valued at more than $277 million. This is one of the largest short positions ever seen placed against the movie theater chain. Antera Capital has 1 million shares in call options for AMC. This means its short position against the company is a 5,500% difference. Now, first of all, why Antera? Why Citigroup? The same people making deals with Adam Aron and the company. Do you guys trust them? Do you think this is nothing and they are trustworthy? Or do you think this is a problem? You let me know in the comments down below. However, they did not exercise these options, which is not going to necessarily put a problem in the price and demand and suppress the price downwards. What it could do is essentially affect the max pain on AMC instead of the actual share price. So just keep that in mind, which then down the road could further affect the share price, so on and so forth. So that theory on Reddit does seem more valid than them just loading up on shorts to dump the price or lend out shares, or so on and so forth. So just keep that in mind. Now, the options chain for AMC is looking extremely bearish compared to GameStop. 38,000 calls expiring in the money compared to 219,000 puts, as well as another 345,000 calls out of the money compared to 300,000 puts out of the money. And if you look down the options chain, it is bearish for next week, the week after, so on and so forth, and you can go down the list. However, notice the only bullish weeks are June 2nd to June 9th expiration, which is exactly when GameStop is announcing their earnings. So what I'm expecting right now is AMC is going to have a sympathy pop following GameStop's earnings, and institutions are playing this smart because what they're doing is saying, okay, we're not going to bet puts, lose money, but we're also not betting a lot on calls so that the stock price cannot gamma ramp, because that is where the problem will occur if that does happen, because then it will create this momentum that we essentially can't stop. What they're doing here is they're basically evening out the options chain, gonna let it have that sympathy pop. They're not gonna load up on puts. However, the week after that, it seems as if they are going to get ready to dump it, as there are huge bearish bets for June 16th. So just keep that in the back of your head. AMC is still falling into the floor, and they're pumping short exempts on it. 151,000 short exempts on a day that basically didn't even move. They are suppressing AMC as hard as possible. Speaking of suppressing AMC, institutional ownership is interesting, correlated over to GameStop, because it was kind of stagnant, and in fact they ended up selling off towards AMC's low before retail picked it up, and then it ripped. January buy button was taken away, and I don't think shorts were ready for this. They told institutions, all right, you guys need to load up. They bought a little bit before the June run up. The June run up occurred. They loaded up more. In fact, they didn't even sell for those profits. Why? Because shorts said, yo, Vanguard, BlackRock, you guys need to take control of the institutional ownership flow and really lend out these shares so we don't get fuck. Okay, this is what's happening. Institutions are lending out these shares. However, they have been dropping institutional ownership to where we're evening out right after that June run-up. It's hard to see where it's going to go with AMC, but it does look like GameStop may or may not lead the pack on this one. According to Ortex, 25.05% short interest utilization maxed out, shares on loan 168 million, cost to borrow average for AMC 128%, and a max at 134, and the cost to borrow not being reported for APE at all over on Ortex. Now, if you guys did miss that GameStop call out, make sure to pop in the Discord. The link is in the description down below and in the comments. I'm in there on the daily, as well as 500 members now of the most amazing people who talk stocks all day long. Plus, we have options trading alerts in there. We post losses, post gains, and more. So make sure to join that. Also, if you want up to 20 free stocks, each valued up to $2,000 per stock, use my link in the description or the comments. Download Moomoo, sign up, make an account, and make a deposit. Once you do that, it takes 2 minutes out of your day. You are going to start earning free stocks from there. Plus, you're getting free access to level 2 order book data, so you can see where whales are loading up and dropping off shares, access to trading options, going long, going short, viewing other exchanges, customizable earnings calendar, and more. There's literally no reason not to do so. Also, if you're from Australia, once you do this using my link, you're getting a guaranteed 10 free AMC stocks plus another 10 on top of that. Now, looking into AMC's chart real quick, we're finishing the blue cycle. Just to update you where we're at, we are about to play out potentially one of these green cycles, in my opinion, and we have all 3 bars pattern laid out for you down below. All 3 of them are bullish. If they play out to the degree, then it could be very bullish. If they play out to a smaller degree, either way, it is still a small gain. But again, leading up to that early to mid-June point of interest level, where AMC could potentially have that major rip along with GameStop. That is where we're sitting at with AMC's chart right now. Before we close out the video, Biden says he will be meeting with the Chinese president at some point, but not necessarily soon. Iraq has banned US dollar transactions domestically, and the SPY is just trading sideways. I don't see a lot of power in the S&P 500. However, if it accumulates right here and then gets a volume kick to the upside, I would watch for a break over 420. If that does occur, I am still bearish on the SPY. I think we see 404 before 420, and then potentially 400 and lower and lower. We have talked about that in previous videos with what's happening with banks, institutions, these Hong Kong low float companies like HKD, so on and so forth. So if you guys do want to keep up with the videos, make sure to have post notifications on, and let me know in the comments down below. Do you think we hit 420 first, or we hit 400 on the S&P 500? Overall, this is what I got for you for today's video. Hopefully you found value out of the video or enjoyed watching. Another thing is, this is the second time I recorded this video, which was a pain in the ass because because my mic wasn't plugged in. So please just hit the like button on the video. I love you all. Peace.